We have with us Mr. Yashovardhan Saboo, who is the founder and chairman of the company. Mr. Saboo, good afternoon. Thanks a lot for joining us. Well, Q1 results were really strong for the company, also driven by a low base for you. But can you tell us what is the outlook looking like? Because Q2 is seasonally weak. How has the performance been so far, and what will drive growth for you in FY23?
Good afternoon. Pleasure to be here. Indeed, our Q1 numbers were strong, and not only because of a low base, even if we compare it with the pre-COVID period, which was a very, very robust growth. And this really is underlying what we have now come to believe, that there are a couple of very important structural factors which are leading to this strong undercurrent of demand growth that we are seeing. One of them is, of course, the fact that today wealth in India and incomes in India are rising to a level where the discretionary spend is going up overall, and disproportionately in the luxury segment or in the high-end segment, we are seeing that. Second, very important, we are seeing a shift away from buying outside India to buying India, and that's not only because people have not been traveling. Even after travel has opened up, I think there is a shift happening, primarily because customers, first of all, realize that pricing in India of luxury watches is comparable to everywhere else in the world. Service and sales and after-sales service is better in India now. And most of all, people are now preferring to buy in India with papers, paying with a bill, making sure the watch is genuine, having all the necessary backups and papers, not wanting to get into any tax hassles and so on. And third factor, very important, within this purchasing going up higher in India, we're seeing a great preference for our company, Ethos, mainly because there is now the trend when people start to buy luxury products, they first search on the net. Their first product research is done on the net. And that's where we are very, very strong. So we're seeing a large portion of leads actually coming to Ethos. And that's, so these are really structural reasons why we see this strong demand. We're seeing a good quarter. Again, as you mentioned, Q2 is seasonally weak. But if you compare quarter to quarter, again, it's a very, very robust growth that we're expecting. And overall, we expect this to continue really for the whole year.
Mr. Saboo, afternoon. This is Rima here. We'll get to the nitty-gritties of the numbers and the nuances, but just a big picture from you. Say 5 years down the line, what is your vision for Ethos watches as things currently stand? Say in terms of a revenue size, the number of stores that you're looking to open up, in terms of the contribution from the exclusive watches. In 5 years, where do you see the company?
That's a very, very interesting question. And I'm going to start by answering, where do I see India in the next 5 years? I think we all know that India is going to see robust growth, barring, little niggles here and there, but India is going to see a robust growth. I believe that in the discretionary consumption space, that growth is going to be disproportionate. There are several reasons to believe that the growth in India, in the luxury market of watches, or even in the premium market of watches, will exceed the 11 to 12% forecast that some experts have given. I personally believe it could be higher. It was much higher for a 15-year period in China after China crossed this threshold of about $2,000 of per capita income. That's where we are. So I believe that the growth in the Indian market is going to be very robust. We ourselves have already said that we're looking at a 30% growth this year, and we expect double-digit growth in the 20% range to continue for us over the next couple of years. This is in the watch segment. There is the other segment, which is pre-owned watches, that will grow even faster than 20%. And third, I think there are the other segments which are going to start kicking in over the next two years or so and start to contribute to the growth. So I believe this growth at about 20 to 25% per year for the next several years, 4-5 years, is something that we are looking at.
30 to 35% growth.
Terms of,
yes.
And in terms of, of course, watches and luxury watches will continue to be an important part, but we see other segments starting to kick in because we understand the luxury segment, and these segments are maturing. Branded jewelry, travel accessories are something that we've already signed up, and we expect to grow those businesses as well.
Exactly, that was going to be my next question. You're talking about new verticals, but from the existing verticals, right now exclusive brand contribution is around 26% of total revenues. Your digital sales are 1/3. Where do you expect that to scale up to? What kind of growth are you expecting? And will you see online sales becoming a bigger pie? Are they more margin accretive for you?
So let me first deal with the online sales. So we don't really create a very big distinction between online and offline sales. The way we are seeing the market and customers evolving is that they look at it seamlessly. The journey starts online and it ends offline. It starts offline, it ends online. It can be a mix of both. People go into the store, people go on the net, and this is now getting seamlessly connected. And one of our big strengths is that our stores, physical stores, which is a great place for customers to experience luxury, physically see and touch the watch, which is very, very important in luxury products. That is seamlessly connected with their questions, queries, and experience online. And therefore, it's difficult to distinguish this online and offline. But you're right. What we say as internet-led sales is about 32 to 33% right now. We do expect it to go up a little bit. During the COVID period when physical shopping was not allowed, this had actually gone up to beyond 40%. We do believe in the next couple of years this will tend to go up a bit. However, it is not. There is really no appreciable difference in margin on online and offline sales because our pricing is exactly the same. What it does do for us, of course, is allow us to reach into geographies where we don't have a store yet, right? So using my digital platform, I can reach to a customer in Bhubaneswar or in Jalandhar or in a Siliguri and invite them to either visit our stores, or if we worked it out well enough on the net, we will send our salesperson to them and to consummate the sale. So that is the real strength of the offline, online, or what we call the omni-channel platform. As far as your other question was relating to the exclusive brands, you're right. Last quarter it was 26%. In earlier quarters it has been 28 to 30%. It varies around the 28, 29% number. We do see it going up gradually. You will recall that 5 years ago this was about 5%, so it has gone up very steadily. We do expect it to go up and probably into something like a 35% range, and we'll be very happy with that number.
35% by when?
Today a lot depends on the availability of watches, but I guess over the next couple of years, we do expect it to climb to about 35%.
Quickly, some of the new verticals that you're targeting, one of them is luxury luggage, and the other one is branded jewelry, as you said. What's the current size? How much do you expect that to grow? And what is the investment that you need to put into these new areas?
Well, we haven't really started on these areas yet. We've signed very important agreements. We are waiting for the first boutiques to open. We are waiting for the malls where we have the stores to open. So, it's going to start in the last quarter of this year. It's been a little bit delayed because of the mall openings. But I do want to say that, for example, on travel accessories, we've signed up with Remova, which is an MBMH group brand, the top brand in high-end travel accessories and luggage. With travel opening, we believe it's going to be a very steady growth in this business. And what we already know is that Indians are already buying Remova luggage everywhere else in the world. So we are glad that we're going to be able to bring it to India too. Branded jewelry is a completely different ballgame altogether. Globally, if you look out at the luxury groups, their strongest growth today is coming from jewelry. Whether it's Cartier, whether it's Van Cleef, whether it's the Richemont Group, whether it's Bulgari, all the big names globally are showing a strong growth in branded jewelry. That shouldn't surprise us in India because a company like Tanishq, Titan, has shown immense growth and the potential of the branded jewelry segment. So I believe this is going to be a fast-growing segment in India. We've taken the first position of signing up with a very contemporary and new brand, international brand, Messika Paris, and we hope to start selling the products in the third and fourth quarter of this year. Okay. We will know the growth when it comes. It is a low growth. It will, the first 2 years will obviously be a learning phase and slow growth, but after that, I expect a strong acceleration and a huge potential for this vertical in the future.
Okay, all right, Mr. Saboo, it was a pleasure speaking with you. Thank you so much.